Investors believe that AMD will be the next stock that will benefit from the rising effectiveness of AI. I tend to agree. I think AMD stock has excellent prospects over the next year and 2 years. In fact, I have AMD stock near the top of my list of top stocks to buy in 2024. So, with that being said, where do I think AMD stock price could be in 2 years? Well, that's the question I'm going to answer in this video. So, follow along and let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Already, Nvidia has benefited significantly from the rising effectiveness of AI. Arguably, Nvidia has been the main beneficiary of that trend. You can see its stock price absolutely soaring starting 2023, rising from around $175 per share to $615 a share. An explosion, to be sure. AMD, meanwhile, has not yet experienced a similar surge. I mean, its stock price is higher to $180 per share, but the company hasn't benefited in the way that Nvidia has. That's what has investors thinking that its boom is coming. However, that remains to be seen. Take a look at AMD and Nvidia's revenue going back in the last decade. What do you notice here? Look at this explosion in Nvidia's revenue. So Nvidia has already experienced the fundamental increase in its business due to the rising effectiveness of AI. It's not just hype for Nvidia. It's not just potential. It's not just something in the future. It's already happening. Revenue is exploding from let's say a little above 24 billion up to 44 billion in trailing 12-month revenue. AMD, look at it, flat, and it's actually coming down 22 billion in trailing 12-month revenue. Now, Wall Street thinks 2024 is going to be different. Wall Street thinks AMD's revenue is going to increase in 2024 and in 2025, and that's what has investors excited. In fact, Wall Street thinks AMD's revenue is going to increase from 22.65 billion in 2023 up to 26.69 billion in 2024, a $4 billion increase. And then it's expected to grow again to 31.13 billion in 2025. So here is the boom that's coming for AMD. This is where investors think AMD is going to capitalize, growing from 22 billion in revenue in 2023 up to 31 billion in 2025. So over the next 2 years, a roughly $8.5 billion increase in revenue for AMD. That's a significant increase. That increase is expected to boost its earnings per share from $2.65 in 2023 all the way up to $5.12 in 2025. So nearly doubling its earnings per share over the next 2 years. That's where investors think AMD will benefit over this time. Now, it's because AMD has been investing in research and development to increase its capabilities in AI. You can see here the company saying that the decrease in operating income in 2023 was primarily due to increased research and development investment in artificial intelligence and product mix. So they've invested to increase their capabilities in AI. So yes, they have not yet benefited, and you can see that in their operating profitability as well. Nvidia with an operating profit margin at 45.94%. Meanwhile, AMD negative 0.41% in the latest trailing 12-month period. So investors are betting that AMD will catch up to Nvidia. They're similar companies after all. They both have GPUs. AMD has more CPUs as well in addition to GPUs. But investors are thinking they sell to the same end market to users that are using their chips for similar technology. So they think AMD is going to catch up. They don't think AMD is going to pass Nvidia, but they think AMD is going to catch up here, and that catch up is going to lead to an increase in its performance in revenue and in profitability and in cash flow. Let's take a look at the importance in cash flow from operations. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. So now that you've seen that, let's see the numbers for AMD. 8.38% compared to 41.99% for Nvidia. So even if AMD closes this gap, halfway, back to where it was traditionally, it was, not that far away from Nvidia. So if it catches up in this metric, that's a big boost as well. So given all those prospects, let's look at my price prediction for AMD 2 years from now. So if I assume, like Wall Street expects, that its earnings per share will come in at $5.12 in 2025, and I also assume a price to earnings ratio of 70, AMD's stock price could rise to $358 per share by the end of 2025. Now, that would be a nearly doubling of where it's at now. So I don't think that scenario has a very high probability of coming to fruition. I think its price to earnings ratio is going to be much lower than 70. So let's say it's at 60, at $5.12 earnings per share. That could mean its stock price increases to $307 per share in 2 years. Now, while I am optimistic about AMD and I have it in my list of top stocks to buy, 307 is above where I think it will end up 2 years from now. What about 50? At a price to earnings of 50, AMD's stock price could be $256 per share from $180 per share in 2 years' time. This scenario is more along the lines of my estimate of where I think AMD's stock price could be. I think AMD's stock price will fall in this range between $250 a share and $260 per share by the end of 2025. Given all of these scenarios, That's the scenario that I think has the highest probability out of these four scenarios. Now, if things are much worse and investors are only willing to pay a price to earnings of 40 at a $5.12 earnings per share, its stock price could rise to $204 per share, which would be a roughly 10% increase in 2 years. That would be a disappointing rate of return for a company like AMD. So, my base case, my best guess is that AMD stock price will be between 250 and 260 2 years from now. But remember, I've used a lot of estimates and assumptions to come to this conclusion. There is no telling if that's where AMD's stock price will actually end up. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.